Andy, Jamie, what's going on today?
What's up there, Andy? I think you might be muted.
Think you're right.
Yeah, you're off mute.
Thank you, Scott. Jamie, man, my old pal, you left me hanging the last couple of weeks, but obviously I did the same thing a couple of years ago, so I know what you were going through. But great to have you back, man.
Yeah, good to be back. Kind of halfway in the saddle, not completely set up yet, but enough to be back. Yeah,
All right.
made a move. So we all know that moving is the most wonderful event on the planet. Everybody loves it, right? Yeah. Okay. It doesn't matter
No fun.
when it is. Moving is the
No.
most awful thing on the planet. And now we can move on.
Yep. And you know what's funny? It doesn't matter if you're really moving 2 blocks or 200,000 miles. I mean, you still have to break that house down, get your stuff
Oh,
in the truck.
it's the little things that
I'm
kill you.
telling you. All right. Well, hey, thanks everybody. Yeah, Wally says exactly. Thank you. All right, guys. Thank you so much for coming today. We hopefully have some cool stuff for you. I know we will. Just talking about Holly, man. What about that today, Jamie? That was Neo.
Yeah,
Was on
and a slow,
fire.
and it was a slow kind of, I guess what's the best term here? Well, it was exciting, a little drama because it took a while for things to get traction today, but then boom,
Hmm.
boom, boom, then things started working, and it was a poetry in motion. Let's just
It
say that.
was.
Hmm.
It certainly was. All right, guys. Well, we won't keep you waiting any longer. Let's just go over the disclaimer real quick. Anything that you hear, guys, we're going to be talking about some stocks and some setups and things like that. But just keep in mind that is for educational purposes only. All right. So anything that you hear us say or that you see on our screens should not be construed as investment advice. If that's what you're looking for, just seek out a stockbroker or somebody who's licensed in that capacity, like an RIA. But we're going to have a lot of fun. So let's dive in and tell you about what we have coming just around the corner next month on October 20th. We're having our Trade Ideas Summit 2018. Great lineup, guys. Just looking at those three names over there, if you've been trading at all over the last few months to a year or several years, you've seen those names. The keynote speaker, I should say, is going to be Brett Steenbarger. The guy, holds a PhD. He has trained in many professional trading organizations. The guy has written books on the psychology of trading. Guys, this is just, you don't want to miss this. And the tickets, get them now while they're cheap because they will be going up. And also we're going to have Brian Shannon. He was a big hit last year, and also joining us this year is JC Perret. So be sure, guys, to get more information by going to TradeIdeasEvents.com, and we'll have some stuff about hotels in there, discounts. So anyway, I'm looking forward. I'm going to be, we're all coming, so would love to meet you guys. So come on down. All right. For those guys who are in here, I know the regulars know they're aware of our incredible support, education, and training here, but bear with me, you regulars, while I tell the new people in here about what we provide other than a killer, far superior, real-time trade ideas software. We back it up with tons of experience and tons of education and training. It starts in the trader's room with Barry. This is basically 6.5, 7 hours a day of getting to look over Barry's shoulder and see the software and listen to him call out trades. And not only that, there's about 500 traders in there and some really good ones. So if you're new to trading and you want to just come in there, check out our software, and check out some really good traders trading, I can't think of anything better. So get in there. Of course, this is great, even if you're an experienced trader. Guys, we have 4 webinars a week, all in the 5 p.m., the same time slot that we're doing this one today, Monday through Thursday. You can see the lineup there on the left side. I'm not going to go through each one today, but some really good stuff. The only one that's missing is our Tuesday one in there because that's a subscription service. But anyway, it's in the same time slot, and it's Steve hosting that, and I'm alongside him. And then our Friday support sessions. This is a scheduled 3-hour event on for 11 a.m. Eastern time on Fridays, every Friday. If you did not get your questions answered during the week, come in there, check it out, and that's strictly a Q&A. So you fire away the questions. We have no agenda for that day. We just listen to your questions and we answer them. All right, not finished. We have TI University. Okay, this is what you get to sign up for when you subscribe to Trade Ideas. These are live classes. Okay, they're not recorded. They're live where you can come in. We go over the curriculum. We spend about an hour in each one of these classes going over the curriculum, but during that time you're asking questions and we're answering them. Each class is an hour and a half, and we've been taking the full time answering questions, and you graduate each day until on Thursdays you take the advanced with Jamie 401, and I tell you what, by the time you get finished with this TI University, you're going to have an incredible grasp of the software. And if you don't, there's plenty of places to come and get those final questions answered. All right, let's talk about Brokerage Plus. All right, I am hearing word that, guys, this beta is coming to an end. Okay, if you do want to get grandfathered into this, you're going to have Trade Ideas Premium. So you might, if you're thinking about doing this down the road, because I promise you it's going to cost you when it does come out of beta. So sign up now for your Trade Ideas Premium so you can get grandfathered in that. All right, do you want more information? First of all, what this is, it's a way for you to automate your trades through Interactive Brokers and turn on the robot and let it fire away while you go play golf or something. But anyway, find out more information about that at trade-ideas.com/beta. All right, I'm seeing some questions come in here already. Thank you, Jamie. He's on top of those. Let's take a look at our agenda for today. Market recap. You know, we did finally get that gap fill. Steve and I were talking about that on Tuesday. Anyway, I'll talk about that once I pull up the spiders here in a minute. Holly recap. Neo proving that he is the one. That's a little take from the Matrix, but of course I'll put a question mark in that. But Neo's been performing pretty good lately, and today was a standout day. We'll go over a lot of those trades. We will spend some time on Holly today because there's a lot to talk about there. I'm going to revisit the Global Market Watcher today again. I did this last week and I shared this alert with you guys, and I think it was good for your overall just awareness of what's going on, you know, in the world markets. And I'm going to show this again, and then we're going to go through and compare the spiders January high and see what those world markets were doing versus what those world markets are doing today. I think it's going to be a great experience for you. So, and then I'll give two schools of thought based upon this data. And then, of course, I think I had this in here last week. I just left it in there because it is good to have a pulse on the world markets. And then, composite rating. I don't need to go back to that. We're going to talk tease you a little bit more because I think that is coming out really quick, guys, and we will we'll talk about that in just a minute. But right now, let's pull up the spiders and let's talk a little bit about the market. Okay, let me see. I do have some questions coming in. I'm going to make sure. Okay, looks like Jose's asking some general trading questions. All right, so let's pull up the spiders here. Oh, I don't know what happened there. All right, so this is our spiders, and I have it going back to last January high, and then we also had a gap right here as we broke through that January high from last week, and then what happened is we had a nice gap and go. And I know I talked about this last Thursday as well. I said, guys, many times when you have a breakout like this, a non-resist, where there's no resistance, in other words, there is absolutely no resistance. This is all-time highs. More than not, you come back and test that breakout level. Well, that's what we did today. We can call it a successful, so far a success of testing that level, went down, closed the gap, and came down a little further, and actually we can call that testing the breakout level there. It doesn't have to be to the exact penny. And then we had a little bounce there. So let's kind of zoom in now. But that's good if you're bullish. It's definitely good, but there still needs to be some building off of this. So far, we still have not had a reversal candle in what, 1, 2, 3, 4, 5 days now. So we'll see what happens tomorrow, being Friday. Who knows? But you know, so far so good. As long as this holds, obviously we did break the 10-period moving average. That's okay. We got a 20 here. And even still, we could break that. And I mean, it's going to take a lot now to where this tape is actually kind of bearish again. But you really want to hold these all-time, levels here. Breaking out of this high because you can, have what's considered a possible fake breakout if we don't hold these levels and we drop back down, and it could cause some serious selling there. But so far, we got our gap fill, we got the retest of that high, and now let's see what happens from here. I don't know. After, I don't know. I'm just not going to say too much. All right, let's take a look at the Qs. The Qs are much deeper, and this is actually more erosion than what you see in the spiders, if you will. So let's just kind of draw our breakout level. Now this is obviously not the January high because the Qs had already taken out their January high. So you had a breakout level from right here. And now we have broken that break. We just didn't test it. We tested it yesterday, and now we broke through today. We're below our 20. Got the 50 coming up. You can see that this 50 has been a great little guiding moving average so far. Look at here. We cupped it right there, almost to a T. Then you had what? So you got like 1, 2, 3, 4, 5 data points right there where it bounced off the 50 moving average. So I am real curious of what happens when it comes down to this 50, if it gets there. There's a chance it might not get there. But if I were a betting man, I would say there is probably a more chance than not that it's going to get there, only because we do have some kind of deterioration here as far as breaking. We broke through the breakout level and some pretty decent volume, a couple of really bad days. I would bet we have a date with this 50 moving average coming up here, either tomorrow or Monday. That's just my opinion. My opinion is not worth much anymore. But let's take a look at.
Don't short yourself, Andy.
I know that, Jamie. I'm just being silly, but thank you, though. I appreciate that. Diamonds, though, look at this. Okay, so look at it, finished up on the day. After looking at the Qs, down, almost a percentage point, and then you pull up the diamonds here, and it's like, wow, okay, well, let's see what we got going on in diamonds. Well, it still have not taken out their January high, and still a good ways from it. But nonetheless, you could say that there was some money coming out of the high flying tech sector today and moving into more of the mundane kind of industrial stocks. But we'll have to see how that pans out, because that held up pretty well. IWM, it's kind of ugly too, and much like the spiders, even more so. You have a nice pivot level here. We'll have to see if this holds, and once again, if I was a betting man, I would think we would test this level probably tomorrow or Monday, but we'll see if that can hold. All right, Mr. Hodge, what are you thinking here? I mean, obviously, look at that. I mean, there's not a bearish, anything bearish I can draw up about that. I mean, it's still above all its major averages.
It's just acting like a normal thing, right? Whether it's a stock or an indice or whatever, we're going to go retest these little boundaries. We wicked back up. I mean, use your imagination a little bit. You can kind of, see in advance, okay, how long are we going to chop sideways this time? How many days is it going to take to get back to the top? I mean, I say that now, right? But of course, when we're in the chair, right?
Yes.
And that it's a very good segue into the Holly material today, because I think I fell victim just like a lot of people did early on, and you're seeing the SPY, bleed on down to the lower extremes, and then all of a sudden Holly's getting long things, and you're like, oh, wait, I don't feel safe. Well, because that's just us being humans. And of course, look what happened before the day was out, and the market never really I mean, it didn't go back to highs, that's for sure. Made up about half of its range, you know. It's just a very good example of the statistical system and how we still have to get used to it. And, you know, the more experience you have, the better. But hey, we're all humans, and we still got the two demons on our shoulder every day, the fear and greed demon.
Oh yeah.
But it was interesting. It was very interesting today because, you know, kind of a slow start on the equity curves and then just ratcheting on up. I mean, I was sitting here looking at, you know, NEO just before, you know, I started talking here. I'm like, my goodness, there's just so much to talk about. So if you're ready.
You know what? I do want to make one before I pass it over to you,
please,
Jimmy.
Please,
There's one topic I want to, because I've been seeing more and more of this, and I think this is something I really need to point out to you, because I'm now some of it is going to be logical of why this is happening, but still, I think there's something that needs to deserves observation going forward. And what I'm talking about here, Jamie will break down a lot of these trades for you, so I'm not going to go into, you know, a lot of these trades, but I do want to talk about this. So this is NEO today, and I just sorted it by risk off, and because what I want to do is kind of show you, because I've been seeing more and more of this. Let's take a look at some of the losers first, and what you're going to see a lot of times when you look at these losers is, even though some of them may get in the money real quick, there's the pain seems to come a lot quicker than the winners. In other words, I see so many no pain trades with the winners. I mean, just I know, because I've been a trader for 20 years, and I'm looking at some of these trades and I'm going, my gosh, the trades I used to enter all the time and still do. I seems like I experience more pain than a lot of these winners that I see. You know what I'm saying, Holly? I mean,
exactly.
So let's take a look at some of these. This one actually turned into a winner, and actually this is kind of an anomaly because it was an earnings play, and Holly was buying a pullback and just got it too quick, and you can see it just kept going and stopped it pretty quick on that one, and that was a painful one. But hey, you know what? When you're looking at risk off, you have to look at those. I mean, it was an alert, and it did hit its stop, and it was a painful one. We don't have too many $1 stops. Most of them are around 50 cents, 25 to 50 cents. But let's take a look at this IDTI. Okay, there you go. There's the entry for a long, and maybe a little bit of green, and then rolled over. Let's go to this pet Q. Remember, this is a long trigger, almost immediately right back down. Immediate pain. TALO. Once again, another long. Where is it? Right here. And just immediately falls down. There's no bounce. So a lot of pain early. And SC, this is a short right here. Just kept going, ran to the stop. So what I'm not seeing a lot of times in these losers are a nice little profit for the first let's say minute or two for the trade. It seems like a lot of times these are happening pretty quick. Now I want to go to the winners here in NEO, and we're used to this statistical probability and seeing these winners. That does not surprise us, but what surprises me is how many of them are really no pain trades. I mean, you get in the trade and they go in your favor. So let's take a look at the CNDA. Boom, right there's your trigger on a long, no pain. Look at this. This was actually a little bit glitch, and she got out for a timed exit at 26.47. But if you were trading this, you actually saw the target and a lot more in this trade. So on risk off, this one was, I think it should have been a target hit, and I'm not sure what happened there, but looking into it. Of course, the big one of the day, this IART. There is your entry right there. No pain, just hits target and just keeps going.
That thing was a monster today.
Wasn't that a monster? Look at that risk on at 4. If you stayed in this trade, you're looking at $4.30. That is just
swimming against the tide as well.
Mm-hmm. Exactly. Absolutely, it is. Yeah, remember the day we had, guys. This was an ugly day from the get-go, but you can see that Neo, what she did well, long and short, and we're going to look at some of these shorts. AXGN, pullback alert on support, boing, look at there, no pain, and bounced. Okay, now this was a risk off trade of 67 cents, risk on 18, so because it did come back. Okay, now let's take a look at some of the shorts. ECYT, look at there. There's your entry, no pain, just straight down after that. When I say no pain, I mean you're not experiencing any loss on your blotter. There's no red on your blotter. These turn green and they stay green. Zuo, let's take a look at Zuo. Right there, this was a fade, putting on the brakes. There's your trigger, poked up just a little bit. I wouldn't call that pain at all. Actually, I call that maybe even able to get a better price. But so there's your entry, and look at that, straight down. So guys, what I'm saying is I pointed this out in these webinars before. This one, there's your entry, and it was a short. And yes, no pain for risk off for 27 cents, and then finally you caught a bounce. If you stayed in it, you may have felt a little pain. But
a timely exit on that one, though.
That was a very timely exit. And I probably could go on more. Let's do TVTY one more just to see. And look at there. On support, there's your trigger, no pain. So guys, I just showed you basically the top 7 winners, and there really wasn't any pain in any of these. That's what you like to see. I mean, it's quite remarkable for Holly to generate these kind of numbers, but to generate it without any pain, I don't know, Jamie. It's just,
well, you know, you bring up a good point there, Andy, because therein lies the value of the statistically charged entry. There's a gazillion other charts that look exactly like that, but they didn't work like that one did. The end result was not the same, simply because the odds were not tilted in our favor. All right, it's the same as, you know, if I went and sat down with a professional blackjack player who could count cards, and I'm just average Joe going, oh, you know, I know I need to hit that 16, you know, blah, blah, blah. He's going to outperform me because he knows the statistics on every hand that's dealt. Okay, translate that to the market. Sure. Say this all the time. How are you applying statistical probability to your trading plan? Bug eyes, deer in headlights. You wouldn't get very many people going, oh, well, I do this, this, and this. Most people are not implementing this into their trading routine, pure and simple.
Absolutely, great stuff, Jamie. So yeah, I wanted to throw that guy out to you guys because maybe you can gather some insights going forward. You know, in other words, if she gets in a trade and immediately turns red and gets a little sloppy, and I don't know, you know, like we say, it's man and machine. So maybe you can get to where you can actually manage these trades better, and you should, than what Holly's doing. So. So yeah, look for those kind of things. And I know today was great, and the market's been kind of sloppy lately. Yesterday, or I guess it was, no, yesterday wasn't that bad at all. It was Tuesday wasn't all that good. But these are the kind of days where you really gotta, you know, it's just, man, I was amazed. Just look at these numbers, guys. All of the Hollies were up, you know, big on the day. Of course, a couple of them did have the luxury of having IR in it, but. I'll let Jamie kind of, I hope I didn't steal too much of your thunder there, Jamie.
No, there's, like I said, there's plenty to discuss here. Okay. What was I going to say? Yeah, the IART was generated. Sometimes there is signal duplication, and here and there, one or two, but typically not the norm. Okay, so you ready, Andy?
I am. You can take it, or I can pass it, whatever you want to do.
Oops, hold on 1 second. I hit the wrong button. Jamie, there we go. Okay, let me know when you can see.
All right, got it.
I was just checking out Warwick's question there. I'm not really sure I understand that, Andy. Maybe you can figure out what that means.
Oh, no, Warwick. That would be, you would have to have the premium package to get that's Holly. or a artificial intelligence. So you have to have the premium package to get that.
Okay.
Yeah.
All right, so welcome to my desktop. You can see I've got Holly Neo currently pulled up here, and just like what Andy was showing, we're going to sort by risk on here. Now, we had a couple of questions that were AI specific here. Ash was asking about the Smart Stop, right? So once again, Holly's strategy panel, and then the trade blotter, all trades blotter here, where we can see everything. So the Smart Stop. Notice I have a Smart Stop column implemented right here, and for each and every trade, it shows what that Smart Stop value is. Now, some of the strategies, or I should say the majority of the strategies, implement the Smart Stop. As you can see here, for each strategy, we can see what type of stop loss is being implemented, mainly Smart Stop, 3% on this one, just a simple 3% stop loss. And then this one is a little bit fancier, a certain percentage above the low of the day, right? And that looks like Michael Noss's work, if I had to guess, Andy. But in any case, you know, a lot of the strategies do use the Smart Stop. Now, what is the Smart Stop exactly? It's one of our filters, right? So I could easily pop into any window on my desktop. Now, I don't know if it's going to be in the top list, but we'll see. Okay, yeah, there it is. Smart Stop. All right. So the AI is simply implementing this filter, and the Smart Stop was designed as a more scientific approach to what a stop loss should be based on each individual stock. You know, there's no point in putting a blanket of 50 cents across the board because 50-cent move is much bigger on a $5 stock as it is in a $50 stock, right? So what the Smart Stop does, in essence, is looks at a couple of volume parameters along the lines of relative volume and what the average volatility for a certain time period is, and comes up with, you know, hey, volume is high, so I need to multiply average volatility by this, and that tells you what the recommended stop loss is for that stock on that day based on the characteristics of that stock. So you can see here what we have. We had a range of, if I sort by Smart Stop, biggest was 75, smallest was 25, a lot of 25s and 26s, 28s, 29s, and 33s, but that's all going to be dependent upon relative volume at the time and what the average 15-minute volatility is, and what that, you know, number, the final number is once those metrics are multiplied together. So Ash, I hope that answers the Smart Stop question. And it's fairly effective, as you can see. Now, what I'm going to do here is I'm going to go over a couple of examples of, you know, engaging with Holly. That was another question that popped up. You know, well, how do you interact with Holly? You know, do you take all trades? Do you pick and choose? And the answer is both. It's just kind of dependent upon the type of trader you are. Now, the purest form obviously would be to take every entry. If you really want to play the statistics, the house odds long term, it does make sense to get into everything. Problem is, you can see, let's just sort by entry time over here. And this all is going to be dependent upon, you know, how handy on the steel are you, right? The keyboard and the mouse, and how quickly can you see a signal, pull it up, and go, boom, buy or sell or short, right? Now you can see the gaps here. 7 minutes into the open, or actually, is this Pacific time? Yeah, this is Pacific time. Sorry. Now I'm in Central. I'm getting confused. So the other interesting observation here is NEO didn't get active until pretty late in the day, right? 2 hours in, right? But you can see the gap here, 8 minutes, 37 seconds, or 8:37 and 42 seconds. Plenty of time to get into these trades if you're trying to take them all. Of course, that's not the way most people start out. Can't say that, you know, some people haven't started that way. That's the way that I'm inclined to go.
Wait a minute, Jamie.
Yeah.
I think you may have not adjusted your time, or maybe you did. It actually started. She had several trades in the first 30 minutes. Yeah,
that's what I thought, because
you're thinking
my
of
time zone back
time.
to Central. Yeah, so I'm so used to thinking in California time. I was like, am I seeing this right, Andy? And then of course that tricked me because you associate the 1 o'clock close with California.
I
Sorry,
had the
ladies and
same
gentlemen.
problem when I
I'm
moved
in a
here a
time
couple of
warp.
years
I'm in a
ago. I'm like,
time
oh
warp
my
right now.
gosh. Yeah,
Yeah, yeah.
exactly.
Okay. But anyway, you can see the gaps here. There's plenty of time for you to manually execute these things if that's the way you want to play it. But as Andy and I were talking about earlier, when Holly starts firing out those longs and we're getting this, you're like, the human in me kind of,
Yeah.
shudders for a moment. But then you see, hey, if you hesitated on this guy, and let's shrink this down into 5-minute candles because, share a little bit of, hey, you're like, boom, that's kind of an encouraging little bottoming wick there. But, if you hesitated for even 5 minutes, whatever, a minute, and you're like, I'm not chasing it, and then a lot of us do that,
Hmm.
hey, well, it's pretty far past the entry point,
Oh yeah.
right? Plus the market's coming down, what are you going to do? But once again, those are our human emotions. That's not the, well-oiled, statistically, calibrated machine that is Holly. And of course, biggest winner of the day right there. We all know there are stocks that rage up and down markets and stocks that rage down and up markets. It's just, how do you get in front of them? What brings them to your attention? And in this case, it was a strategy, which is one of the best performing strategies. Sunrise Mover, doesn't matter, still had 59.6% chance of working. Now, of course, look how it performed, 1 out of 3 today. But the one that worked, boom, it was a big one. So let's talk about risk on, and then I'll talk about some other ways to interact with the system, which were very applicable today, as far as like sometimes on a soft day where, on those longs we're immediately out of the money, you're not going to be able to be in all of them, number one. So, the game I played today is, okay, let's watch, and some of these are going to get right down to the stop loss, barely punch through. Perhaps I'll use those as entry signals, right? Assuming we're feeling comfortable with what's going on the daily chart. So right now, let's just talk about risk on. We can see here on this IART chart, Holly followed her programming, dollar profit target, took all of what, 10 minutes to get up there, right? Maybe slightly over 10. Let's look here, 8:37 to 8:47, yeah, less than 10 minutes. That profit target got sprung. Now we're in it. We're like, wow, this thing ripped up quick. Should I get out? Well, it's kind of up to you at that point, right? This one is a little bit more vertical than what we're used to seeing. A lot of times we'll see a stock consolidating for a long period of time. Holly will take her nickel or whatever, and then it'll bust out. This one, I mean, you could just feel the momentum, right? Doesn't matter what type of data you're looking at. You're looking at the level 2 and you're like, zip, 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 all the offers get ripped. You're like, it's barely backing off half of what it ran up each little time, so I'm going to stay with it. You might have been able to glance down here at your single stock window and go, well, damn, relative volume has been high all day. I can also see volume on the 5 and the 1 minute periods are still off the charts. Well, we can't really rely on a stable pattern here. We're in it, it's ripping up, but we can look down here and go, man, this rocket is still lit, right? If we look down here and we saw a relative volume of 0.9, at that time, or, some below one number, and we noticed volume on the 5 minute was normal, well, then we might have been a little bit more cautious. But there were a lot of ways to feel this one. So in other words, we see Holly getting out here. We can opt to stay in the hold position or do a little bit of both, which is what I recommend because it satisfies both of those demons that sit on our shoulders, fear and greed. Well, I'm scared that if I don't take the money, it's going to back off, but I don't want to miss out on a big move either. Well, okay, get out of half with Holly, keep that other, that second lot. Preferred method over here is to set the stop loss on the second lot. If you're going to go risk on, you're going to acknowledge that Holly's getting out, but you're going to hold it. On that second lot, flip it back to a 0 break-even stop loss. If it does roll back over, you flat that or lose a few pennies, but you still won on the trade. Best case scenario on this one, you made a point, and then you made somewhere between 1 and 4.39 points on the second lot. It's just capturing some of that spread there, right? There's always a spread. Look here, 20 cents. There's a $1.25 on the table there. There's over 50 cents on the table there, 40 cents, right? Those are big X factors, right? 4X on this one, on not quite double on that one, a doubler here. So the name of the game is just capturing some of that spread, right? Over the long term, it really does add up. You know, I'm not going to start talking about profit per share, but that's all, that is something that people should think about that are active traders, because this is a business. Every time you push the button, you pay money, right? Hopefully we make money and overcome commission, but it really does get down to that level. When you start thinking about things from a statistical standpoint, you're going to go down that path a lot more than not, you know, using a statistical system. So let's pick one that was a little bit, let's see here. This is a classic example right here on this short on Reggie, right? We get the nice, beautiful signal right here, as Andy was pointing out, pain-free. Boom, as soon as we hit that thing, we're in the money. Now look what it does right here. And why did Holly get out of this one? It almost looks like it would have been a profit save, but she went the distance here with the timed exit on Reggie. And let's see here, what was that strategy? Reggie was downward dog. And we can see the timed hold is 60 minutes right there. So 60 minutes expired. She did what she's programmed to do. But you know, this candle is a little bit special here, because during that time,
going into that, yeah,
it broke this little range right here, which this is also a good entry signal, right?
Mm-hmm.
We get the statistical play up here, but then later on, boy, what a great opportunity to add to a position. I mean, this is a trader's dream right here, this trade. We get in, we're in the money, it's going sideways. Holly bails on the timed exit. You know, if you kept half on the table, used the break even stop, you got paid well. In the future, this is going to happen again. So in the future, you're like, oh, I've seen this song and dance before. Not only am I going to hold the whole lot, risk on, I'm going to double up or add to the position, which is one of the hardest things for any trader to get their head around. When do I add to a new position? You know, and the more you interact with this system, the more second nature all this is going to become. So let's look at some of the stop outs today, because on a day like today, where the market's coming down and maybe we didn't pull that trigger like we should have and kicked ourselves a bunch for not getting into IART, well, fear not, because let's see.
Hey, Jamie, that's a great segue to a question that Jay had. He said, so a regular stop is based on support resistance and other factors that are fixed at the time the trade is picked, versus a smart stop that updates during the trade to account for volume. I think we need to explain. No, it's not correct. You know, yeah. So
okay,
explain the stops to him. Yeah.
Okay, so let's just look at Reggie. Okay, which, by the way, downward dog. Let's make sure here it is employing the smart stop, right? So all this, it's basically, as soon as the trade comes out, all of that's calculated. The stop is inserted up here. That is the smart stop that was calculated at the time, right? Whatever that and I can't go into too much detail here, but let's just say it's relative volume and 15-minute volatility, right? If the stock's 15-minute volatility is normally, I don't know, 20 cents, but it's doing 2x relative volume, well, then you're going to be looking at more of a 40-cent stop. But that's all calculated in real time, right? So, of course, I haven't read Jay's question here, so
I think you're kind of on it there. The stop is set the moment the alert comes out. It's nothing that's going to adjust during the.
It's not going. It's static. Once the trade is put in, that hard stop is in effect. If it goes out there, it's a stop out. But of course, in this one, it never even acted like it. So it's all hard set, and that's why we populate your chart so that not only do you see the numerical values here, but you also have a visual here. As soon as you double click on that blotter, everything's populated: stop loss, profit target, entry price, and current price of the stock. So I hope that answers your question, Jay. Support and resistance, this might look like, this is our own customized, stop, because, it depends on what type of time frame you're talking about as well, right? So, yeah, okay. Jay says, thanks. Cool.
All right.
All right, now what we're going to get into here, we're going to talk about the stop hits, right?
Mm-hmm.
Now, which one of those did you pull up earlier, Andy?
Oh, let's see. Let me take a look at my screen. I'll probably tell you.
Well, here's an interesting one here, Cato. I think that was
Mm-hmm.
was that a stop hit? Yep, it was. Okay, so let's say you did, you're in a few trades, maybe a couple are Holly generated, maybe a couple are from your other trade ideas windows, but in the meantime, you look back over here and you see that Holly's made this entry in Cato right here, pretty much not quite the top, but at the top of the candle, not the wick. And then of course, as soon as the wait, hold on. Let me make sure I'm looking at the right. Yeah, it is a long in Cato. Yes. So
Yeah.
boom, just immediate pain on this one, or maybe a little bit of profitability, but then a rollover. And then you look and you see Holly's about to get stopped out, and then you see the stop out occur, but then the stock is on your radar. Not because you jumped into it, not because it looked real pretty, but because you just looked over and you're like, ooh, she's down in that one. Just like Andy and Steve and
Uh,
Dan and Brad and all us old dudes used to have to go to an actual office to hit the SOS system because it was the mid 90s. You couldn't do this from home. But guess what? People in that office that weren't such good traders, we'd look over and we'd be like, hey, Bob's in this, and now it looks like a good entry, but he's about to get stopped out. Well, and we make an entry and we capitalize off of his pain, right? This is the same methodology, except it's not really a person, it's a program. But imagine that this is a person putting on statistically weighted trades, right? You look over, you see they're about to get stopped out, then you watch. And you're like, okay, well, I've seen this so many times where trades barely get stopped out, right? This isn't even the most pristine. I mean, sometimes it's just to the penny or a penny below. And then you're like, okay, time for the bounce, especially after you see this little, this bottom put in and this candle begin. I mean, you could jump right in and use the bottom of that candle as your entry, your exit, and you never would have been in trouble, right? And, it's all about the timing, right? Why would you ever be looking at this? Because Holly got stopped out. And we know that sometimes stops, they just bounce right off of it. Now, of course, you have to be comfortable with it. You also have to be comfortable with where it is popping into its
mm-hmm.
daily. That looked like a pretty good play based on the close of the previous day and just kind of butting right up against that little area of support resistance, right?
Mm-hmm.
So yeah, that's support resistance, but we're just, hey, it bounced here. We got a higher open here. I can get in here and really risk just a few pennies and benefit off of Holly's pain, just like we used to do in a trading office. So it's the same concept, right? Matter of fact, it'd be real interesting. I think about this all the time. What if I just used stop outs as entry signals? I don't know. I've thought about it, but I haven't accumulated enough data on it to really come to any conclusions. But I can tell you this. Every day I see a couple of these things that actually work. So keep that in mind as you move forward. Lots of different ways to interact. And you'll learn by default. That's just it. Everybody's perception is different. So you sit 10 people down with the same program and you let them interact with it for 20 days, a full trading month, you're going to get different observations. Some are going to be the same. Some man, woman is going to be using it the same. Some are going to be using it completely different, right? Because we all have different modes of perception. Now, I choose to try to go down the simplest paths, right? All right, well, how are the AIs doing today? Should I participate? Put a lot of emphasis on watching these equity curves draw themselves as the day progresses, because this one was never really out of the money. Now, this one just took off like a bat once it got traction, but on a lot of days, you'll see a little ebb and flow on the equity curve as it gyrates between negative and positive, and then you'll see a breakout, very similar to what you might see in a stock, right? So Andy, I feel like I'm just rambling now because I've been out of the chair so long, and I just took a look at the time, and I know you got some stuff to talk about, so.
Yeah, but it's good rambling. Always love to hear you rambling. So.
Yeah, I just realized that time's flying here, so let me kick
All
it
right.
back over to you because I know that you always.
All righty.
like to keep some special stuff in the hopper.
Yeah, I've been doing a lot of special stuff lately, but unfortunately, I just been so busy I didn't have time to create anything new. But I do have some good just good old school kind of logic to share with some of you guys, because I did mention I shared everybody with this global market watcher the other day, and what I did is I just took the iShares of different countries and dropped them into a watch list. And I was looking at something today, and I kind of wanted to bring it to your attention. And what this is, you can see, guys, this is just iShares of different countries. You can see the countries out there. Interesting enough, Israel and Qatar are the only really ones, you know, kind of up on the year, and everything else is kind of stinking, you know. So I talk about it's always good to have your, you know, pulse on the world economy, world market. And so what I wanted to do today was kind of show you the difference of what I'm seeing, and it raises my awareness of potentially what we may have going on here. And I say potentially because, let's face it, you know, our markets have been very strong. They've been very bullish, you know, and I'm definitely not shorting these markets, and there's no reason to short this market now. But there is a reason in my opinion to be, especially on a investor time frame or longer hold time frame, to be wary of any real serious follow through here. And I'm going to show you what I'm talking about. And first of all, there's an old saying that what is this, Jamie? The market fools a certain percentage of the investors 100%. I can't remember the saying, but basically, as the market
There's a ton of those sayings, yes.
Yeah. 100% of the investors 100% of the time, or something like that. I can't remember the exact sayings. I'm sure somebody will help me out. But what a great scenario this would be for this kind of action, where you got a lot of people kind of bearish on the market, and then we do, over the later summer months, end up finally breaking through this high going over right here, probably flushing out all the bears. And not only that, probably bringing more longs into the market, because we did take out the all-time highs. And I can't think of a better scenario to basically just trap everybody and just fall right back down. In other words, a fake breakout, you know, of this January high. So taking a look at this spiders market, what I wanted to do is, well, let's go see where these other markets were back, you know, in January, when the spies were hitting highs up here. And I think you're going to find something really interesting. Let's take a look at this Hong Kong index down here. And look at that. Look where it was in January, back when the spiders were hitting highs that first time. Peru, just ugly, but January they were doing quite well. Let's take a look at some of the European markets. Wow, look at Italy. Back when spies were hitting highs in January, it was way up here. Guys, I could go over and over these. Germany, let's take a look at Germany. And wow, look at that. Look where Germany was, and then look where they are now, down here. Quite different than what you're seeing in iMarkets. And trust me, guys, I can go through pretty much every one of these country iShares, except probably, you know, obviously Israel and Qatar, but which are holding on quite well. But Japan, let's take a look at this one. Look at that. And you've had a pretty good fall off. All we got to do is pull up the emerging markets. That's another one. See what the emerging markets back in January, when the spies hit the highs, and look at them now. So the world economy is not healthy. Now, I mentioned two schools of thoughts here. So you cannot take this data and say, wow, you know, I think our economies, or I shouldn't refer to them as economies, it's markets. Our markets are going to follow and go lower. That's one school of thought. Okay, we talked about how it's a world economy right now, and you know, the spiders may be getting way ahead of themselves, and they're going to pull back along with the rest of the world. I guarantee you that's one school of thought. Another one is, okay, the world economies are doing so bad, where else can I put my money except in the good old United States, maybe Israel, maybe Qatar, but nonetheless, I think you need to have this in the back of your mind, especially if you guys are longer term traders. In other words, if you're in some positions right now and you're starting to feel some pain, maybe you should consider maybe lightening up, because I know a lot of things out there, even in our markets, are not doing as well as the averages are reflecting because of the balance and the weight that we have in a lot of these indexes. And not just the spiders, Qs, and the other ones. There's a lot of index funds out there that trade different things where they have a big weighting of Apple, Amazon, and all this. So you just got to keep that in your back of your mind. So looking at the world economy, not a rosy picture, okay, versus what we're seeing over here. Does that mean we're going to sell off? Not necessarily. Like I said, the other school of thought is, hey, there's not a lot of places to put your money, technically, unless you're value investors and you find value in some of these beaten up countries, but the charts are saying stay away. So anyway, I wanted to share that with you. I think it's something you gotta keep in the back of your mind as you watch the market going forward. Maybe keep an eye on some of these. And our last topic is, guys, and I hope I'm not teasing you again, but let me just pull up the back up here. Let me see. Where am I at? Agenda. All right. This is what you're going to look for. I think the icon is going to read SCO, little o, big R-E. The SCR are the big letters in there, meaning stock composite rating. This is what I've been sharing with you guys. Let me pull it over. So it's not going to read composite rating like you see in my here. We're turning this into a real filter now. It's no longer going to be a proprietary custom. Well, it'll be proprietary, but it won't be a custom formula. Okay, we're going to make a filter out of it. I am hearing, okay, today in our meeting that this will be done by the end of the week. So I'm yes, Wally, that is awesome, and I hope they don't disappoint. They've disappointed but at least when I hear, here we are 2 days or a day and a half from the end of the week, and we're all in it, and so I would think if they're saying that, we're for sure having an early next week. So I should never say for sure, but man, I'm really hoping. Yes, David. Yes, Marguerite. Thank you. But this is what you want to look for. So occasionally, maybe what you want to do, I don't know if there's going to be an announcement on this, probably not. So probably what you want to do is maybe occasionally tomorrow, maybe reset your connection, go in, take a look at your filters and type in score and see if maybe oh my gosh, it just pulled up. Look at that. Guys, you have access. I did this before. I did this before the webinar today, and it was not in there. So
yeah, I did not expect to see it this soon, but hey,
no.
Great.
All right. So you guys have it. So have fun. You can put that in obviously columns. Put it in your single stock window. So every time you pull up a thing, you will have it. So man, I wasn't expecting that, Jamie. So you did get a treat today.
Christmas come early, Andy.
Yeah, how about that? Somebody verified that they just did it and saw the same thing in their system. I hoping it wasn't just me, because I am on a developmental. I'm sure it'd be access to everyone if it's just a filter added. So, Waleed, could you check and see if you have that for me and get back to me? And while he's doing that, yes, great. People are telling me they have it, so that is good news.
Most excellent.
All right, so you guys play around with that and have fun with it. It's pretty cool stuff. All right. With that said, Jamie, if you don't have anything else, I will bring in Scott and
nothing over here. Nothing over here.
All righty.
Hey.
All right, Scott, you want to come walk us out?
Sure, thank you. A couple items on the way out. There's an ebook. It's excellent. Andy and Jamie both contributed chapters. Just go to trade-ideas.com/ebook, put in your email address to get the download link. It's got 5 strategies on how to win in a rocky market. So go ahead and get that. We've also got a podcast coming out tomorrow. believe are returning from vacation, so it should be a new one and not one from the archives. Make sure you get the newest episode by searching for Trade Ideas Podcast in whatever app you listen to podcasts in. Add us as a subscription. And also check out the archives. We've got some great old ones with guests. There's going to be new ones coming up. We've already booked a couple guests for the next few months. Subscribe, stay tuned, see what happens. We have an event coming up in October. Andy and Jamie talked about it a little bit at the top of the podcast, but find out all the details at TradeIdeasEvent.com. We've really got a great lineup with Brett Steinbarger. He's a trader psychologist, has trained a lot of trading desks. He's a really insightful guy. Brian Shannon, JC Parrott's also very interesting speakers. Brian was at our last event. And we've also got some other speakers too that just aren't at the top of the lineup, but go ahead and check that page, TradeIdeasEvent.com, to see who's already booked to be there. We'll probably add a few more. It's a great day. Get the tickets before they go up in price. Alpha Studio is the code this month to save 15% off your first month or year of Trade Ideas. So all caps, just like it is on the screen, write it down and become a subscriber when you get off of this pod. We'll get a recording of this up on the internet later on tonight or tomorrow morning, and you'll get a reminder tomorrow how to find that playlist from GoToWebinar. Any questions, just shoot us an email, info@trade-ideas.com, to go to the help desk. You can follow Jamie on Twitter at QuantBot. Our Steve Gomez is at Today Trader. We've also got at Trade Ideas. Facebook.com/TradeIdeasPro is the location of our Facebook page, where you can like the page so you get new updates there and share those with your friends. All right. Thanks, Andy. Thanks, Jamie. Thank you all.
Thanks.